Hi guys, I hope that you're all doing well. In today's lesson, we'll attempt the May June 2025 paper 2 accounting paper. This is about inventory. So let's look at our topics. Question 1, we have VAT and creditors reconciliation. Question 2, we have cost accounting. Question 3, we have stock valuation, which is inventory. So let's go to question 3. This question 3, we have Helen's Electronics. Helen Woods owns an electronics shop that sells a variety of electronic products. The financial year ended on 28th of February 2025. Records for headphones, television sets, and vacuum cleaners and pressure cleaners are provided. You have headphones, the first in, first out, FIFO, stock valuation method is applicable. Required, we have 3.1, calculate the value of the closing stock on 28th of February 2025 using the FIFO method. It's worth 5 marks. You have 3.2. Helen decided to change supplies in September 2024 after receiving advice from her sister, the store manager. Provide 2 points to show that her customers are unhappy with the quality of their headphones purchased from the new suppliers. Quote figures. What advice would you give to Helen about changing the supply in the future? Provide 1 point. Okay, those are the questions. Let's move to our information. We have information A, which is the stock balances. B, purchases. C, you have carriage. D, returns. E, and sales. From there, it's television sets, which means we don't have to read all that information. We just have to focus on the first information that we've been given. And remember, I told you guys that when you get your exam question paper, let's say you're starting with inventory, let's say it's your most comfortable topic, you can go to the third question, attempt it first, and when you do, you don't have to read all of this. You just read the section that you have to start with. Treat this as if it's an activity. I know that it's an exam question and these tables are a bit intimidating, but if you take it step by step, you guys will realize that this is actually very easy. Okay, so we have our information. In information A, we have stock balances for headphones. On the 1st of March 2024, this is our opening stock. Opening stock. We had 170 units, then unit price including carriage. Okay, that means you don't have to include carriage when dealing with these units and that unit price. It's already there. Don't forget that. You can also make a few notes for yourself in your question paper. So you have our total, which is 24,650. Let's see whether this makes sense. Let's say 170 times 145. We'll get 24,615. Remember, this is including carriage, okay? So you guys have all these tables. As I said, play with these figures. Try to make sense of them so that you're a bit familiar with them. Let's move to 20th of February 2025. Here, this is obviously our closing stock. Closing stock. We had 350 units. You have 350 units. Our unit price, we don't have a unit price. Our total, we don't have a total. That means you have to calculate those. But they've given us our units, so I think these will come in handy. I'll show you guys a trick that they included in this question. Now let's move to information B. We have our purchases for headphones during the financial year. You have April, June, September, and December of 2024. Okay. Now let's move to units. You have 250 units, and the unit price is 165. So let's say 250 times 165, it's 41,250. That figure makes sense. Now let's try the June 2024 units. Let's say 300 times 180 gives us 54,000. Verify the calculator. We have September 2024, 30 units times 135, it gives us 51,300. December 2024, 320 times 150 gives us 44,800. So let's add all these units, punch them in a calculator, and our answer will be 1,250. So that figure makes sense. Now let's move to our total. We'll say 41,250 plus 54,000 plus 51,300 plus 44,800. It gives us 191,350. So that table makes sense. Now let's move to C. You have carriage on purchases. Headphones are delivered to the store by Jiffy Transport at a non-refundable rate of 20 Rand per unit. Okay. The carriage on purchases is not included in information B. Let's go to information B. There's information B right there. Purchases of headphones during the financial year. They said that the headphones are delivered at a rate of 20 rand per unit. That means where we see 165, we have to add 20, add 20, add 20, add 20. Okay. Now let's move to returns. 80 headphones were purchased in December 2024. 80 headphones that were purchased in December 2024 were returned to the suppliers. Then they gave us an amount 11,200. So 80 headphones were purchased in December 2024. Yes, December 2024, we have 320 units. 80 were returned. That means we have to subtract 80 from this 320. Guys, please make sure that you update your tables because you guys will see how handy this is when it's time to answer your questions. Now let's move to sales. 1st March 2024 to 31st of August 2024, we sold 680 units. Remember, it's the sales information, meaning what we sold. So the selling price per unit, selling price meaning how much one headphone was worth. Remember, we're dealing with headphones. 680 units is a lot of units, and we sold them at 220. So we say 680 times 220, which is 149,600. This figure makes sense. Now let's try the next figure. We have 310 times 220. It gives us 60,200. That figure also makes sense. So here, on the 1st of March 2024 to 28th of February 2025, we sold 310 units. That's still a good amount. So they were also sold at 220, same selling price. And we made 68,200 from the sales. So 680 plus 310 should give you 990. Punch it in your calculator. We have 149,600 plus 68,200. It gives us 217,800. So we are a bit familiar with our information. We've also updated our tables. Now let's look at 3.1. We have required calculate the value of the closing stock on 28th of February 2025 using the FIFO method. So guys, this is a trick question 3.1. Remember when I taught you the FIFO method in the previous video, we weren't given the closing stock units, which is the normal way. So if you aren't given the closing stock units, you'll use this formula. Remember I said that you don't have to memorize or cram the formula when dealing with FIFO or different valuation methods. The formula is usually there. I think it's just for FIFO though. So we'll say opening stock, which is this 170, right? Plus you have to add our purchases. Plus purchases. What do we have? We have carriage. You'd normally add our carriage. We have returns. We obviously subtract our returns. As I've said in the previous video, we also have our sales. We have to subtract our sales. And this would give you the closing stock units. So from here, you guys know that you have to substitute your units and then you'll get your closing stock units. From there, you'll multiply with the relevant unit price, then add your carriage if applicable, if you're given the carriage. That's what you guys did in the previous video. If you don't understand what I'm saying, please go and watch the FIFO video. It's also featured in the playlist. So in this case, we have our closing stock units. They gave it to us. It's 350. So that means this method isn't applicable in this exam. So you have to erase all of this. If your examiner gives you the closing stock units, which is 350, your goal is to simply find out which recent months these 350 units came from and how much they cost. So let me write down the steps for you guys. So for our steps, we have to start at the bottom of the table. Step 2, adjust for returns. Step 3, compare and fill. Step 4, move one step upwards. Step 5, apply the costs. So you can just drop us an email or text us on WhatsApp and I'll share these steps with you guys because I'm certain that this might be something common in a question paper. However, you don't have to memorize these steps. If you know what you have to do, then you don't need to cram all of this information. So let's look at the bottom of our table. Here we have December 2024, okay? We have 320 units minus 80 returns. So we have to say, let's specify December 2024. We have 320 units minus 80 returns. This information was given to you there in the returns information in information D. So can you guys see why it's important for you to update your table? Otherwise, you would have just written the 320 and continued with the next step. So when you get your question paper, please make sure that you play around with the figures and update your table. So we'll say 320 minus 80, which is 240 units. Now let's look. In December 2024, we have 240 units. This is what we'll work with. Let's look at our closing stock units. We have 350. So let's note this down. Closing stock units, 350. It's given to us. So we have to say this 350 units, the closing stock, okay, minus your 240 units. 350 minus 240 is 110. So this is 110 units. Guys, for December, you calculated 240 units, okay? For this amount, or for those units. So does it cover your entire 350? We check this by saying 350 minus 240, which gave us 110. So it doesn't cover all the units. We still need 110 units. So we have to go from here to there. We have to go to September 2024. Now let's check. We have 110 units here, okay? Do these 110 units get covered in this 380? Yes, there won't be any units that are left if we take this from that. So we're basically done. We no longer need to subtract. From here, let's highlight our units. We have 210 and 110 units. So let's write this 210 here, 240, excuse me, and the 110. Remember, this 240 units was from December before we went to September. So we have to say 240 times, what is our unit price? We have 140 plus 20. 140 plus 20. Now for 110, we took it from this batch, the 380, which is in September. So we have to say 110 times 135 plus 20. Do you guys see why it's important for you to update your tables? Otherwise, you'd have to read all this information, check for your carriages, check for different adjustments and so on. So please make sure that you update your tables. We'll say 240 times 140 plus 20. Please make sure that you put this in a bracket to ensure that your figures are accurate. Your answer will be 38,400. Now let's move to 110. We'll say 110 times, in a bracket, 135 plus 20, which is 17,050. So we calculated our units here as well as there. We then have 38,400 and 17,050. We aren't done. We still need the value of our closing stock. Remember, in inventory, we want to find the value. So this will be 38,400 plus 17,050, which is this plus that. And your final amount should be 55,450. This is the value of a closing stock. This is how you find the value of the closing stock under FIFO when you're given the closing stock units. If you still don't understand what I said, please rewind the video, watch it again, make a few notes for yourselves. And remember, as I said, when you watch the video for the first time, please don't make any notes. Try to concentrate and try to understand. For the second time, make sure that your notebook is right next to your phone or your tablet or your computer. Make a few notes and try to compare as you're writing. Try to pause and play the video, and trust me, everything will make sense. But as I've said, I'll try more exam question papers, and when you're done with the series, you will master inventory. So our closing stock, the value of our closing stock is 55,450. We've answered 3.1. Now let's move to 3.2. Now let's look at 3.2. We have Helen decided to change suppliers in September 2024. Let's take note of this, September 2024. When you get your question paper, update your information, underline or highlight information that is relevant or important. So in December 2024, they changed suppliers after receiving advice from her sister, the store manager. Okay, so her sister's the reason she changed suppliers in September 2024. Okay, we have provide 2 points to show that our customers are unhappy with the quality of the headphones purchased from the new suppliers. Quote figures. Let's read this again. 3.2. Helen decided to change suppliers in September 2024 after receiving advice from her sister, the store manager. Provide 2 points to show that our customers are unhappy with the quality of the purchases of the headphones purchased from the new suppliers. So what this question basically means is that she changed suppliers, right? Now they want us to prove that customers didn't like the quality of the headphones. Why didn't they like the quality? Because Helen changed suppliers. They loved the quality of headphones that the previous supplier was offering. So let's check. In September 2024, we have 380 units. Okay, let's check. 80 headphones that were purchased in December 2024 returned to the suppliers. So guys, this question basically wants us to find the disadvantages of her changing the suppliers. So the relevant information could be, let's look at this. Headphones were delivered to the store by Jiffy Transport. That talks about carriage. You don't need that. Returns 80 headphones that were purchased in December. Remember, she changed suppliers in September. We have September, October, November, December. So 3 months later, 80 headphones that were purchased were returned, which means it's the new inventory that she bought, the new headphones that she bought, because she changed in September. So we can quote this 80 headphones that were purchased in December. So number one, we can say something like headphones, excuse me, let me label this well. This is 3.2. Headphones were returned in December 2024. But they said we should quote figures, right? So let's say 80 of them were returned, which is a very high volume. Okay, so you can just say something like there was a high volume of returns, 80 headphones that were purchased from the new supplier in December 2024 were returned. This shows that the quality of the new headphones provided by the new suppliers was not good. The quality was bad. Okay, you can just say something along these lines. As long as you've spoken about the quality of the headphones from the new suppliers, they said you should quote figures. So you said 80 of them, 80 of the units were returned. Let's read the question again. It says, provide 2 points. So the first point was that 80 headphones were returned. What else can we quote? Let's look at our sales. From the 1st of March until the 31st of August, we sold 680 units, which is a lot of headphones. 680 headphones is a lot. So on the 1st of September, let's look at when we changed suppliers again. We changed suppliers in September 2024. So on the 1st of September to the 20th of February, we sold 310 units. Guys, can you see that we sold 680, which is a lot of headphones? Then from September, we sold 310, which is way low compared to this amount. So we can quote that figure. We can say the was a decline in sales, or they had less sales, then you can say, you don't really have to say according to information E, but you can just say according to information E, sales dropped from 680 units. Then you can just include this information 1st of March 2024 to 31st of August. Let's say 1st of March 2024 to 31st of August 2024. This is in a bracket, okay, because you want to show them. Sales dropped from 680 units to 310. Let's tell them that it's from the 1st of September 2024 to 28th of Feb 2025. This is also in a bracket. There was a decline in sales. Sales dropped from 680 units to 310 when she changed suppliers. So what makes inventory a very approachable topic is that they'll usually ask you information that's there. You don't really have to memorize a lot of things. As long as you know your way around, you'll be able to answer these questions. So when you get something like maybe when they change suppliers and they basically ask you something that's bad, look at the information that you've been given. And as I've said, you only have to focus on information A, B, C, D, E. The rest isn't relevant to these questions. Okay? So from the information that you've been given, if they're asking you something bad or something that includes change, make sure that you use whatever is given to you. And remember, I said when you deal with inventory, try to be open-minded. I know that we haven't done any questions that are similar to these. We've done returns and shortages, closing stock, units, we've done turnover and so on. We've done a lot of things. However, here, they're asking you guys a new question. And this isn't something new that requires a formula. You just have to be open-minded, relax, you understood the table, and you'll definitely get these 5 marks. You'll definitely get those 4 marks. Now let's move to the next question and see whether you'll manage to get those 2 marks. What do we have? What advice would you give to Helen about changing the supply in the future? Provide 1 point. She changed suppliers and people returned headphones, which obviously means that the quality wasn't good. Guys, if you buy something from a store and it doesn't work for you, will most probably return that product. Why? Because the quality wasn't good. So if you're a business owner and you change the supplier and people are returning the product, they'll obviously tell you that, for example, these headphones don't sound good, or the quality isn't good, or the battery doesn't last longer. They'll basically tell you defects about your product. So before you change your supplier, what would you think of? Which factors would you consider? We could say 3.2, check the quality of the products. Oh, but they're talking about Helen. So let's say Helen should check the quality of products supplied by the new suppliers before verifying their partnership. Okay, you can just say something along these lines: partnership, that before she agrees to work with a new supplier, they should check the products, they should do product tests, or they should test samples in order to ensure that the new products or the headphones that she'll sell are of great quality. So this is also a very easy question. You just have to use your brain. There's no need to memorize a formula. So we're done with 3.1 and 3.2. Can you guys see how easy these were? 3.1 is a bit tricky, but if you've seen this video, you'll be able to memorize it. There are two ways to calculate the closing stock in FIFO. We have two different ways or two different scenarios. The first one is the normal one. When closing stock units are not given, I won't write all this information. As I've said, please reach out to us and ask for this document. I'll specifically give you this question paper as well as the memo, including our document that specifically tells you how to answer these question papers. Guys, there's a difference between having a memo in accounting and actually understanding what's given to you. In the memo, you only have the figures. So I want you guys to understand the steps, because the memo won't give you the steps. So the first way is if the closing stock units aren't given the normal way. You have to calculate the total units that are available by adding our opening stock to all the purchases throughout the year. Step 2, you deduct sales as well as returns. Then you solve for the balance. Now you have to allocate by multiplying the unit price and compare it to the relevant month. Watch the previous video. So in this video, the closing stock units are given. How do you do so? I said that instead, you have to recognize your closing stock units, which is 350. Then you start at the bottom of the table, the very last batch, which is December 2024. Then we have to adjust for returns or any information that we've been given. Then we have to compare and fill. Meaning, if you have 350 units, do these 240 units cover your 350 closing units? No, you still need 110, and you get the 110 from the previous month. You basically go upwards, okay? You move one step upwards, you go to the most recent batch, then we take the remaining units from there. If you still had to borrow units, you'd have to go to the next month, which is June 2024, okay? Now we have to apply our costs by multiplying those units to the respective monthly costs. Remember to add your carriage fees if required. We did so here, which is why I updated our table. Now let's move to the next questions. We have television sets. We're done with the first part, okay? So television sets, the stock of television sets is valued using the specific identification stock valuation method. Okay, they use the specific identification method. Then the business sold two models, Quantum and Crystal, from 1st of March 2024, the beginning of the financial year. A new TV model, Limpid, was introduced on 1st of December 2024 to replace the Quantum TV model. Okay, so required, calculate the closing stock of the television sets on 28th of February 2025. You have to use the specific identification method. Because they've said so. 3.4, Helen was not satisfied that she was selling an average of 19 Crystal TVs per month. However, she is happy that the new Limpid TVs, despite its higher selling price per unit, is selling at a quicker rate than Crystal TVs. Calculate the cost of sales. Okay, you guys know how to calculate the cost of sales under the specific identification method. Calculate how long in days it'll take Helen to sell the closing stock of the Limpid TVs. I don't think that we've done this before. That's an interesting question. Helen feels that she made a wise decision by replacing the Quantum TVs with the Limpid TVs. Give one possible reason with figures to substantiate her opinion. So you basically have to say something good to show that you endorse this. 3.5, refer to information D. Explain how this will have a positive effect on a business. Provide 1 point. So we have information A, B, C, D. Then we have vacuum cleaner. Okay, we don't need to do that now. Let's just focus on A, B, C, and D. From there we have vacuum and pressure cleaner, so we don't need to worry about that information now. Let's move to where our question started. Television sets. Okay, we're done with headphones right now.